Holy flippity flip flop flapping smokes, everyone. Credit Suisse is toast. We have just got a new shocking report about how bad the situation with Credit Suisse is. And guess what, people? It is much, much worse than everybody expected. Shares have plunged 15% in a matter of minutes. And this is a huge developing story that is going to have big consequences on the banking system. It's going to affect you. It's going to affect me. And this could be Lehman 2.0. So everyone, exactly what new information did we get about Credit Suisse today? Why did the stock crash so much? Which, remember, it has already crashed by a lot. For it to crash again by so much, it must have been really, really bad. And people, it was. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Now, for those of you that don't know, Credit Suisse has been plagued by massive losses over the past year, and it's also been plagued by huge scandals over the past couple years as well. It's had sluggish investment banking returns, it took massive losses when it was forced to withdraw from Russia, and litigation costs for a host of compliance and risk management failures. Most notably when the Archegos hedge fund collapsed and took a $4 billion profit loss. But unfortunately, people, it just keeps getting worse for Credit Suisse. Look at this new shocking report. Well, holy smokes, Credit Suisse shares plunged 14% as bank announces huge third quarter loss and strategic overhaul. Now, this wasn't just some little loss here. It wasn't just a small miss, everyone. This was an absolute mammoth loss, and investors have responded accordingly. Listen to this. This is crazy. The embedded lender posted a third quarter net loss of 4.03 billion Swiss franc. That's 4.09 billion compared to analyst expectation for a loss of 567 million Swiss francs. Did you hear that, everybody? They lost over $4 billion this quarter. That is 8 times analyst expectations of around 567 million. I don't know about you, but I don't think Credit Suisse is ever going to recover from this. They're going to go on to tell us that don't worry, we're restructuring, we're a new bank now, we're putting the client first. It's so funny whenever a company goes under or is facing huge losses, they all go to, well, now we're putting the customer first. Some new innovative way. That's just what something a company should always do. The figure was also well below the 434 million Swiss franc profit posted for the same quarter last year. The bank noted the loss reflected a 3.65 billion Swiss franc impairment relating to the reassessment of deferred tax assets as a result of comprehensive strategic review. So now they're under massive pressure by investors and the CEO is getting desperate. Under pressure from investors, the bank revealed a major overhaul of its business in a bid to address underperformance in its investment bank and following a raft of litigation costs that have hammered earnings. In its widely anticipated strategic shift, the bank vowed to radically restructure its investment bank to significantly cut exposure to its risk-weighted assets, which are used to determine a bank's capital requirements. It also aims to cut its cost base by 15% or 2.5 billion Swiss franc, which is around 2.5 billion US by 2025. So some people may not know, the more riskier assets banks have, the more reserves they have to put aside. Fortunately for Credit Suisse, they're running out of those reserves, so they're having to go to assets that have lower returns but also less risk. And what this is going to cause? Huge job losses, everyone. Look at this. Credit Suisse is going to cut 9,000 jobs to stem losses. I expect as other banks start to take heavy losses as well, from loans going bad, we're going to see more job losses for other banks as well. So here are some financial highlights for this quarter. Group revenue hit 3.8 billion Swiss franc, which again is similar to the US dollar, from 5.4 billion Swiss franc for the same period last year. So not only they had huge losses, but also their revenue is collapsing. It only hit 3.8 million, down from 5.4 million last year. The CE10-1 capital ratio, that's simply a measure of bank solvency, was 12.6% compared to 14.4% at the same time last year, and 13.5% in the previous quarter. So that is a huge piece of data, everyone. Credit Suisse solvency is falling and falling rapidly every single month. And look at these returns. These are pitiful. Return on tangible equity was minus 38.3%, down from 15% in the second quarter and 5.4% in the third quarter of 2021. So Credit Suisse is losing billions. Their revenue is collapsing. Their solvency level is getting worse, and their return on equity was almost minus 40%. That's what happened with these zombie companies that just keep on doing share buybacks because they're insolvent. Well, eventually when the investors realize they are insolvent and sell off these shares, Well, they got nothing else to hold them up. And it wasn't just Credit Suisse that had huge miss in earnings. I tried to warn people about that Q3 this year, we're going to see a lot of companies miss on revenue and the stocks are going to crash. Well, we just got that today. Look at this, more bad news for Meta. Value plunges more than 65 billion amid falling sales and rising costs. So it's looking like Mark Zuckerberg's dream of being a god in the metaverse and controlling the peasants is over. I think Facebook is going to die a slow, painful death. And this is the consequences they're going to have to pay for keep on banning everyone and censoring everyone. Because these social platforms that used to be monopolies, they're now starting to get a lot of competition by alternative media sites. Now again, for those who haven't seen, look at this. Credit Suisse down 15% from the open to its low. And look at this, over the past year, it is down 57%. Also, Alphabet, Google came out with weak earnings. It crashed 9% today. Microsoft as well, down 7% with another miss on earnings. And look at this, Meta down 5.5% today, but in the pre-market, it is down 20.2%. And people, I think this is just the beginning. I think Q4 earnings are going to be even worse as borrowing costs rise to consumers, as people max out their credit cards, as inflation gets worse and people's discretionary spending gets lower and lower. And this short-term rally we're seeing in the market right now, I think is going to get wiped out. We've seen these rallies in this bear market again and again and again. We've had 3 rallies now over 10%. So people don't FOMO in. The fundamentals haven't changed. The only thing that could possibly sustain this rally is if the Federal Reserve does pivot, which is what investors are praying and hoping for right now, but we have to wait to see if they actually do it. But remember, every action has an opposite reaction. So if they do pivot when inflation is surging at record highs, this is going to be a recipe for disaster. It means inflation in 2023 will get worse, and then central banks are going to have to lift interest rates even higher than if they just stayed the course. And that is going to have a huge effect on the banks as we see bankruptcies and delinquencies rise. But everyone, what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in that next video.